Z of SpaceX and Tesla, Elon Musk foresaw a terrifying financial disaster. It's no secret that this year has been extremely volatile with little respite for the financial market. The tycoon predicted that the world recession will start in 2022, which is not a very optimistic prediction. Musk predicts that this year we'll see a global financial or economic crisis with rising inflation. Experts forecast even more turbulent financial situations in the future. What gave Musk the right to forecast the crisis to find out? Keep watching. The U.S. economy created about 500,000 new jobs in March, and the Dow Jones Industrial Average is just 6 short of reaching its record high. During the epidemic, American households had over $2.5 trillion in surplus savings. Though there is a lot of positive news, Wall Street is buzzing with predictions of an impending recession. The economy will implode in 2023, according to billionaire investors, former Federal Reserve officials, and now even investment banks. For some, it's a question of historical comparison. Former Treasury Secretary Lawrence Summers stated that the current state of the economy is unquestionably comparable to earlier pre-recession periods in American history, a recent Washington Post opinion piece. Elon Musk is likewise not very optimistic about the state of the economy in 2022. The internet magnate foresaw the beginning of a worldwide recession in a tweet. Musk predicts that this year we'll see a global financial or economic collapse. We'll have to conjecture, though, as he didn't offer any other details or an explanation for his choice. The financial markets were experiencing one of the wildest anything goes periods in history just a few months ago. But the atmosphere is different today. Experts predict that growing prices and interest rates would eventually cause a stock market meltdown. Macroeconomic predictions are difficult, to put it mildly, according to Musk. He predicts that it won't happen later than 2023, but rather in the spring or summer of 22. Musk made these forecasts at the same time when a number of unfavorable conditions started to worsen. The situation in Ukraine, Russian sanctions, China's zero COVID policy, rapidly rising inflation, and projected increases in interest rates by the U.S. Federal Reserve are all expected to limit GDP in 2022. The concern is whether worsening circumstances and misguided policy decisions will cause the world economy to decline. The stock market has undoubtedly had a challenging start to the year, and many on Wall Street think things will only get worse. Given the mounting tensions brought on by recent and prospective geopolitical developments, this is not surprising. As co-founder of Data Trek Research, Nicholas Collis points out, investors are never completely safe from unanticipated geopolitical development. And though it's hard to forecast geopolitical events, there are a few things that investors should be worried about in the first part of 2022. President of the United States, Joe Biden, imposed sanctions on Russia when the Russians invaded Ukraine. It's also said that North Korea is thinking about starting up its nuclear and long-range missile testing again. Lastly, escalating hostilities between Taiwan and China could jeopardize international supply lines. The MSCI World Index of Global Stocks has dropped by more than 6% in recent months, making it the worst start to a year since 2008, despite a strong recovery in the final days of January. This corresponds to a loss of $6 trillion. Investors anticipate a rapid increase in interest rates from the Federal Reserve this year, so if profits growth is below market expectations, the stock market will likely respond harshly. This is especially true in light of Facebook's dismal results, which caught everyone off guard. The United States' once soaring technology equities have fallen by almost 10 in 2022 following the financial crisis. The Economist, former Treasury Secretary and president of Harvard University, Larry Summers, concurs that there will be a severe recession, although he is unsure of when it will occur. Investors and economists appear to be in agreement, according to a Bloomberg Markets Live poll, with 15 predicting a recession in 2022, 48 in 2023, 21 in 2024, and 16 in 2025 or later. A period of broad economic decline marked by a decline in the stock market, an increase in unemployment, and a collapse in the housing market is known as an economic recession. In contrast to a depression, a recession is typically gentler. Government officials, including the president, the chairman of the Federal Reserve, and the administration as a whole, are often held accountable for economic downturns. Elon Musk recently offered some investing advice to help people maybe guard against this impending apocalypse. This guidance covers the best times to buy and sell stocks. Musk said that when people ask him for guidance on increasing their fortune, the most crucial thing they should remember is to remain calm when the market is frightened. First and foremost, Musk stated on Twitter, buy stocks that you believe in only. The first premise consists of a few essential elements. Musk suggested that investors purchase shares in a variety of firms, but he did not specify how many equities to purchase. Investing in a variety of equities is a smart. The multi-billionaire gave advice on which stocks to purchase as well. He emphasized the word you and advised investing in companies that provide goods and services that you support. Musk has fulfilled his promise on this front. The bulk of Tesla's overall wealth is held by it. Despite his detractors, he seems to genuinely believe in Tesla's electric cars and solar panels. Musk seems to fully endorse Tesla's declared corporate goal of accelerating the global switch to renewable energy. With a net worth of $268.2 billion, he is the richest individual on the earth, according to Forbes' real-time billionaires list for 2022. He recently spent $44 billion for the microblogging service Twitter. Additionally, Musk sold more than 4.4 million of his company's shares, which were worth almost $4 billion. He has to spend $21 billion in his capacity, which might be used to buy the microblogging website. Musk has already questioned a number of Twitter's regulations, so it makes logical that he would want to purchase the social media giant. His remarks in public demonstrate that he recognizes the platform's potential. Musk advised stockholders to sell their holdings solely in the event that the company's goods and services deteriorate. According to what I gather, he thinks that the ideal time to sell stocks is when your initial justification for doing so changes. Stated differently, divest from a company's stock if you have lost faith in its offerings. He advises keeping composed when the market declines. Musk's second and third principles align. Upon market declines, he counsels investors to remain calm. That is excellent guidance. Consider the early months of 2020 following the stock market meltdown. A number of investors became alarmed. Conversely, those who didn't achieve significant financial gains. To put it briefly, Musk suggests that you make investments in companies that generate goods and services that you find appealing. Focus on the long term rather than short term satisfaction, and only sell your investments if you think their goods and services are going worse. Not because stock prices are falling or there is widespread panic. Elon Musk recently tweeted that in times of rising inflation, owning tangible assets like as a home or stock in companies you believe provide quality goods is generally preferable than holding cash. Inflation has been steadily rising recently. The United States' consumer price index has increased by 7.9% year over year, marking the highest increase in 40 years. First to go up in price was gas, then lodging, rental cars, and furniture. The higher the rate of inflation, the faster cash depreciates. Conversely, investments typically see a rise in value over time. For this reason, both Buffett and Musk suggest investing in solid companies with steady stock values during times of rising inflation. But it's important to keep in mind that choosing stocks is a dangerous endeavor, and there's no guarantee that a company's stock will increase in the future, even if it has done well in the past. Investing in low-cost index funds, which are less volatile but still benefit from market gains, is advised by several experts, including Warren Buffett, because these funds include all of the inflation that is currently approaching 8% in the US, even as the unemployment rate fell to just 3.6% in March. They are inherently diversified. Summers now projects an 80% chance of a recession in the US by the following year. Though rockstar investor Cathie Wood believes that investors could benefit from the current circumstances, she is not alone in her belief that investors need not be concerned about how their shares and firms would fare. Following Netflix's disappointing quarterly results last month, hedge fund manager Bill Ackman announced that he had made a $1.25 billion profit by betting on interest rate increases and investing the proceeds in the streaming behemoth. Many of our investments have appeared when other investors with short-term time spans trash terrific organizations at values that look astoundingly tempting when one has a long-term viewpoint, Ackman wrote in an investor letter. Given the current high rate of inflation, investors are uneasy. Although this suggests that the market is expanding technically, a market crash and unavoidably a financial catastrophe could occur. The Federal Reserve initiates an ineffective market correction. It remains to be seen how this will be resolved. Do you share Elon Musk's opinions? Is a recession on the way? Post a comment below.